Look at the coffee cup that you're holding in your hand. I mean, think about how much you paid for that, right? You probably paid about $6, maybe $7 for that cup of coffee. Look at your phone in your other hand. What did you pay for that? Maybe about $1,000. In the American economy, there are two types of people. There are the people buying the coffee, buying the phone. They're standing on this side of the counter. They're the consumers. We pay the money, we trade our hours for these products. And then there are the people on the other side of the counter, and I'm not talking about the barista that handed you your coffee, I'm talking about the owners, people that own the Starbucks stock, people that own the Apple or Samsung stock. When you bought your coffee, a tiny fraction of that $6 didn't go to the barista or the coffee beans, it went into the pocket of a Starbucks shareholder. The consumer gets a caffeine buzz for 30 minutes, the owner gets richer forever. When you bought your phone, Apple shareholders made money, or Samsung or whatever brand that you bought. The question I have for you today is simple. How long are you going to keep standing on the wrong side of the counter? My name is Dr. Nathan Crockett. I'm a Christian theologian who also owns 19 successful businesses and nearly 50 pieces of commercial and residential real estate, shopping centers, warehouses, storefronts. Today, I'm giving you 11 reasons why investing in the stock market isn't just gambling for rich people. It's actually a very reliable way for you to stop working for money and make your money start working for you. Now realize you should do your own research, right? I'm not a professional financial advisor. You need to realize that people can lose money in the stock market. So again, I'm trying to give some helpful advice here. I'm not telling you exactly what to do with your money. You need to decide that on your own. But the first reason that I think it's wise to invest in the stock market is because of the silent thief of inflation. So there's kind of like a boogeyman hiding under your mattress, and it's called inflation. If you're saving money by stuffing it into a bank account or hiding it under a mattress, bank accounts are probably earning like 0.1% interest. You're not really saving, you're losing. Every year, the cost of life, gas, milk, housing goes up typically 2 to 3%, lately a lot more than that. If you put $100 under your mattress today, in 20 years, it will only buy you $50 worth of groceries. The stock market is your shield against that. Historically, the stock market has returned about 10% a year on average if you reinvest dividends, lately a little more than that. It's one of the few places where your money runs faster than the cost of living. If you aren't investing, you're slowly going broke safely. You're trying to be safe with your money by just putting it in a savings account, but you're slowly going broke. Second reason is the snowball. Compound interest. This is what Einstein reportedly called the eighth wonder of the world. Compound interest is incredible. Let's say that you start by investing $10,000 and let's say it grows 10%. Now you have $11,000. Next year you didn't just earn money on the original $10,000, but you're going to earn money on the $11,000. It's a snowball rolling down a hill. At first it looks really small, but give it 10 or 20 or 30 or 40 or 50 years and it's remarkable. That snowball turns into an avalanche. If you started in your 20s or 30s, the vast majority of your wealth at retirement won't be money that you worked for. It will be money that your money made for you. It's amazing the way that works. Third reason, maybe you would think of it this way. You get to be the lazy partner with ownership. Think about Amazon. To build Amazon, Jeff Bezos had to work 100-hour weeks, risk bankruptcy, manage thousands of employees. To own Amazon, you just have to click a button on your phone. I own a lot of Amazon stock and I've never worked a single minute for Amazon. When you buy a stock, you literally own a piece of that company. You have millions of the smartest people in the world, the engineers at Apple, whose stock that I own, scientists at Pfizer, whose stock that I own, logistics experts at Danaos, which is a Greek shipping company, whose stock that I own. That one actually made me millions of dollars during COVID. You have people like that getting up at 6 a.m. to work hard to make money for your stock price to go up. You don't have to manage them. You just have to own them. So fourth reason, you could call this mailbox money. I mean, the term for it is dividends. Dividends are a huge reason for investing in the stock market. Some companies are so profitable, they don't, in a sense, know what to do with all their cash, so they send it to you. They want you to keep investing in them, so they pay you a quarterly, in some cases, it's a monthly dividend. It's basically a thank you check for owning the stock. Imagine owning a rental property, but you never have to fix a toilet. You don't have to chase down a tenant. You don't have to you just wake up once a quarter or once a month and there's money in your account. It's one of the reasons I own hundreds of thousands of dollars worth of REITs, R-E-I-T, a real estate investment trust. I do own real estate properties myself, but the REITs are so much easier, right? You don't have to mess with tenants and so on. It's a company that owns, operates, or finances income generating real estate, and it sells shares to raise the capital to do that. So dividend stocks are a beautiful thing. They're one of the few things in this world that really feel like truly passive income. Fifth reason to invest in the stock market, the barrier to entry is basically zero. If you want to invest in real estate, you need a down payment. For real estate, you need credit checks. You need at least $50,000 or $80,000 cash for your down payment. For the stock market, you can start with the money in your pocket right now. Even with fractional shares, with $5, you can buy $5 worth of Google if you wanted to, right? So you can start with a very small amount as you work your way to trying to get rich. The sixth reason is kind of the emergency brake, I guess you could say. It's a fancy word called liquidity. It means how fast can I get my cash? If you put your money into a house or a rare painting and suddenly you have a medical emergency, you're stuck. It might take months to sell a house or to sell a business. The stock market is liquid. When you need your money, you just click sell. You can have it that same day, right? So the high liquidity is a beautiful, beautiful thing with the stock market. Other investments simply can't match that kind of liquidity, most other investments. Seventh reason, there's some tax benefits. You could call this the Uncle Sam discount, right? The government wants to help you. That sounds really fake, but in some ways it's true. The government creates tax advantages accounts like the 401k and the Roth IRA to encourage you to invest. If you use a 401k, you lower your taxes today. If you use a Roth IRA, you pay zero taxes when you pull the money back out in retirement. If you get a company match on your 401k, that's literally 100% return on your money instantly, because for every $1,000 you put in, your company matches it. It's like free money. If you aren't taking it, you're voluntarily taking a pay cut. So take that employer match, right? Reason number 8 is the track record. History is on your side when you invest in the stock market. The stock market crashes. It does. It crashed in 2008. It crashed in 2020. It's scary. But here's the secret. It has recovered every single time. Like if you zoom into individual years, there are some really bad years in the stock market. But if you zoom out, the line goes up and to the right. Betting on the stock market is basically betting on human innovation. You're betting that American companies will continue to invent better iPhones, better medicine, better cars. And for 100 years, that has been a winning bet. Again, it can have bad years, but if you're thinking long-term, historically, those who've invested in the U.S. stock market have done very, very well. Ninth reason is you're trying to invest in the whole haystack. You don't have to pick a winner. You might be thinking, what if I pick the wrong stock? And the great news is you don't have to pick. You can buy an index fund or an ETF, an exchange traded fund. It's like buying a basket that holds every major American company. For example, if you buy the ticker VOO, that's a Vanguard ETF that tracks the S&P 500. If one company goes bankrupt, in a sense, who cares? You own 499 others. You don't have to try to find the needle in the haystack. You just buy the whole haystack. So VTI, Vanguard Total Index, VOO are great ways to do that. Again, make your own decisions about what stocks you buy. 10th reason, fighting FOMO, I guess you could say, fear of missing out. When you see AI taking over the world, or you see a new tech boom, or you sit on the sidelines and you worry about robots taking your job, you can invest in the companies building the robots. Investing allows you to participate in the future instead of always feeling like you're a victim to the future. 11th reason is freedom. You know, in many ways, that's probably the most important reason for investing. You don't invest to see a high number on a screen. You invest to buy back your time. Every dollar you invest is like an employee, working 24/7, and you don't have to, right? That stock is working for you. Investing buys you the ability to maybe quit a job you don't like, to retire early, to help your kids. I have no desire to retire early. I could have retired a long time ago, but I love what I do. But stop leaving your money on the sidelines. Having the income, let's say from good dividend stocks that as you build up can end up paying you hundreds of thousands or millions of dollars a year off your dividend stocks. That just gives you the freedom to do the things, to give to charities and so on that maybe you couldn't have normally given to. So I would just encourage you, cross over the counter. Don't just be buying the coffee, but owning part of the coffee company. I'm not saying that Starbucks, I have sold my Starbucks stock a while back, but to own part of Apple instead of just buying the iPhone. Cross over the counter and become an owner. I hope this video was helpful to you. Thanks so much for your time. If you enjoyed it, give it a thumbs up or consider subscribing to my channel. Maybe share it with a friend if it was really helpful to you. Thanks so much, and I hope that you have a wonderful day walking with Jesus.